Hey there, everyone. Today, we are diving into a fascinating topic that's got a lot of people talking: the state of the UK housing market amidst economic uncertainty and rising interest rates. It's a tricky situation, and I'm excited to break it down for you and share my thoughts on what's going on. So, let's start with the numbers. House prices in the UK saw a minimal increase of just 0.1% in July, which is a far cry from the usual peak season growth we'd expect. Annual price growth has also slowed down, dropping to 1.8% this month from 2.2% in June. That's a significant slowdown, and it's got a lot of people scratching their heads. Now, here's where it gets interesting. The chief economist at Nationwide, Robert Gardner, points to the ongoing conflict between Iran and the US as a major factor. With energy prices and market interest rates on the rise, it's no wonder buyers are feeling cautious. And when you add in the Bank of England's warning about potential inflation, it's a recipe for uncertainty. One of the biggest players in the UK housing market, Taylor Wimpey, has also sounded the alarm. They're reporting challenging market conditions, with weaker buyer demand and rising building costs. As a result, they are expecting to complete fewer homes this year. It's a clear sign that the market is feeling the strain. But it's not all doom and gloom. Amy Reynolds, the head of sales at Anthony Roberts, offers a more balanced perspective. She says that while prices are flat, sensible offers are being accepted. Sellers aren't panicking, and asking prices are adjusting to meet market levels. It's a sign of a healthy, if cautious, market. Now, let's talk about the bigger picture. Government figures show that homeowners who own their properties outright have lived in their homes for an average of nearly 24 years. That's a significant chunk of time, and it highlights the stability and longevity that homeownership can bring. It's a trend that's likely influenced by an aging population, with more people transitioning into outright ownership. On the other hand, homeowners with mortgages have been in their current homes for an average of almost 9 years, and those in the private rented sector tend to move more frequently, with an average stay of just 4.5 years. It's a clear indication of the fluidity and mobility within the housing market. The moves between tenure types are significant, with nearly 200,000 households transitioning from private renting to ownership in 2024 to 25. But there's also a flow back, with about 100,000 households moving from ownership to private renting. It's a dynamic market, and it's a reflection of the diverse needs and circumstances of homeowners. So, what does all this mean? Well, personally, I think it's a sign of a market in transition. With economic uncertainty and rising interest rates, buyers are taking a more cautious approach. But it's not all bad news. The market is adjusting, and while prices may be flat, there's still movement and activity. It's a fascinating time to be watching the housing market, and I can't wait to see how it unfolds. I'd love to hear your thoughts on this. What do you make of the current state of the UK housing market? Do you think it's a buyer's market, or are there still opportunities for sellers? Let's keep the conversation going in the comments below.